Hello, this is Neil Limbo of the Bruges Group. We recently issued a book written by Bob Liddon on the shadow liabilities of the European Union, and we raised with Sir John Redwood the key points about the level of EU debt and what the UK would have been responsible for had we remained a member. The Bruges Group recently did a study that EU public sector entities had created a culture of borrowing money that created a behemoth of liabilities. We uncovered that 6.4 trillion euros of debt failed to be registered and a contingent liability around 3.8 trillion million euros of debt. With the EU riddled with debt and the UK being liable, certainly if we remained in the European Union, what would be the case if we did remain in the EU with this liable debt, and how bad of a debt would this have affected the economy?
I think it was becoming extremely difficult to remain in the EU and not be part of the euro because you had to leave the room when they had discussions about the euro. But it was very difficult to know when the discussion about the euro ended and discussion about the wider EU began, because the euro is the prime driver of the EU now. It's the central success, as they see it, of the whole project of integration. So I think Britain had to make up its mind. And as Britain clearly wasn't going to join the euro, it meant it was much better to leave. But what was happening was that more and more of the debts which they had to incur to get transfers between the different parts of the euro area to try and make the euro work were on the account of the EU generally, not just on the account of the euro area. So Britain was being sucked in to the costs of regional transfers to try and make sure the euro could work, because we had a nasty euro crisis or two, 2011 to 2013. Where the fact that the rich northern countries were amassing great surpluses and the southern, weaker economy countries were in heavy deficit caused huge tensions within the zone. And there weren't easy ways of transferring the money from the rich parts to the poor parts because the regional policies weren't big enough and so forth. And so they had a meltdown. And then, of course, the result of that was, as I've just been describing, that they had to put more of the bills onto the wider EU. But if you're not a full euro member, why should you have to pay those bills?
This would have certainly created a bottleneck within the European Union. We saw this with Greece, especially, of how big nations such as Germany, France, and even the UK, we had to pay the tab.
Yes, indeed. And then, of course, also something happened which really shouldn't happen in an advanced country major currency. And that was, you could be a depositor of euros in a Cypriot bank or a Greek bank, and for a period you couldn't get your money out. And then in some cases, in the Cypriot banks, you were actually told you could only get half your money out and the other half had been vaporized because the banking system couldn't meet all the debts. Now, in Britain, you never get that because the Bank of England stands behind all the banks and all the money in the system. And so if I deposit money in one city and that city happens to be in deficit, it doesn't mean I can't get my money out of the bank there. And yet that was what was happening in the Eurozone. So it was an extremely difficult situation created by the unwillingness of the successful leaders like Germany and the Netherlands and Austria to share all their money with the rest of the zone in the way you have to do. I mean, in the sterling zone, there are no arguments about London and the main cities of England, Scotland, Wales, and Northern Ireland sharing the money. That's what you do. We're a family.
And that was Sir John Redwood on the enormous size of the EU's debt and how damaging they could have been to the UK if we remained in the European Union.